Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Alan Bush, our Senior Financial Economist, and Mark Soderberg, our Senior Ag Market Specialist. Let's start with Mark. Mark, what are your expectations for tonight's crop condition report?
I look for further deterioration in both corn and soybean ratings in tonight's report. Not a big as drop as last week's 5 to 6% declines, more like a 2 to 4% range. Rains in the past week did favor the southeast and the northern plains, including roughly a third of the nation's corn and soybean crop. Weekend rains also provided temporary relief across northern half of Iowa, much of Wisconsin, northern parts of Illinois and Indiana. However, large chunks of the nation's midsection, including central Illinois, received little to no rain. So to me, conditions last week suggested a crop yield of around 173 bushels per acre. With a further drop this week, I think you're going to see that fall to about 170. I think that would leave ending stocks here in the U.S. at roughly 1.3 billion bushels. Which to me would put fair value for D's corn in that 6 to 6.25 range. I felt last week's crop conditions for soybeans reflected a yield of about 50.5 to 51 bushels an acre, down from the USDA's 52 bushel per acre estimate earlier in June. So in soybeans, we definitely have more time for weather to help improve the crop. However, less wiggle room for lower yields given the tighter supplies. And I do look for about a 2 to 4% increase in spring wheat ratings with the good rains in the northern plains, and look for winter wheat harvest to have approached 28 to 30% through this weekend.
All right, Mark. We've got a USDA report on Friday. What are your estimates?
We feel history and this year's planting progress suggests really little change to the acreage mix from the March intentions. Our corn estimate at 91.9 million acres, that's down 100,000 from the March estimate. Soybeans, we're looking for 87.7 million acres. That's up 200,000 from March. Both these figures are very much in line with the average estimates as reported by the wire services. We also have wheat acres at 49.8 million. That's down 100,000 in March due to lower spring wheat acres. In stocks, we have corn stocks as of June 1st at 4.271 billion. Below a year ago, however, that's about 20 million bushels above the average guess. Feed residual will be the key here to the June 1 stocks. In soybeans, we have an estimate of June 1 stocks, 790 million. That's well below the 968 from a year ago. And our estimate is 15 million bushels below the average trade guess. In wheat, we have stocks at 605 million bushels. That's up 7 million from the last USDA balance sheet.
All right, Mark. How will this weekend's attempted military coup in Russia impact commodity valuations here?
Well, if nothing else, it does provide a great deal of uncertainty to a region of the world that's already very unstable. It also happens to be the world's largest exporter of wheat. And nothing drives volatility quite as much as uncertainty. So despite the appearance that grain shipments are operating normally, wheat prices are sharply higher here today, mostly out of fear of what happens next. And where will the global wheat buyers, particularly in Northern Africa and Middle East, turn if Russia is not able to export this critically important food commodity? Prices will continue to be very sensitive to this, and definitely a developing situation through this week.
Thanks, Mark. Moving over to Alan. What events this week have the most potential to move the markets?
Well, first of all, on Tuesday, we'll have May durable goods, and they're expected to be down 1%. Also Tuesday, we'll have the June consumer confidence index guessed at 103.7. But probably the most important event comes on Wednesday. That's with Fed Chair Powell speaking at the European Central Bank Forum on Central Banking in Portugal. And that speech is scheduled for 8:30 Central Time. Then on Thursday, we'll have the revised first quarter GDP guessed at up 1.4%. And then Friday, personal income anticipated to be up 0.4%. and the June Consumer Sentiment Index anticipated to be 63.9.
You did mention Powell. In light of
Yes.
his speech last week, what can we expect stock index futures to do this week?
Okay, so in the recent past, including at the Fed's most recent policy meeting, Powell's comments have been on the hawkish side. And I think we'll probably see something very similar when he speaks this Wednesday. So with that in mind, stock index futures will probably just only be able to trade sideways in advance of his speech. But I think once his speech is out of the way, I think we can see stock index futures advancing. Also, we do have a 5-day downtrend period. In fact, there's a 5-day downtrend line that I think by the end of the week will be penetrated to the upside. But I think everything is pivotal on the Wednesday speech. So once again, sideways in advance of the speech and higher once his testimony or his speech is out of the way.
All right, Alan, last question. What are the economic implications of the September 30-year Treasury bond futures trading at a 1-month high?
But I think that investors and analysts are starting to realize that the global economy may be slowing at a more rapid pace. So that would tend to affect the global interest rate markets to put pressure on yields and support futures. So with futures now advancing as they have over the last few days, especially at the long end of the curve, I think it's a sign that the global economy is weakening, and analysts and traders are beginning to sense that. So I would expect that is a correct assessment on the part of traders, that there is a likely more quickly weakening of the global economic situation.
All right, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.